Now that I use Monday service, AI makes solving tickets.
Good evening, good evening, everybody. How y'all doing? Hopefully everybody doing well, man. I'm doing great myself. Music was still playing in my ear, man. I'm doing great myself, man. Hopefully y'all doing well. Also, good evening, good evening, good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aradia Grande. That's just Big Spot if you don't hablo español, man. Don't worry. And you are now in tune to another episode of The Intraday Price Action Recap. You feel me? Somebody's at work. Somebody said they at work today. Somebody's at work. Somebody at work. They said, hey, Tim, I'm at work today. And I say, thank God you got a job, because around Columbus, Georgia, times are hard. Good evening to everybody. Shout out Jada in the building. Shout out Here to Learn and Share in the building. Shout out Sarah in the building. Shout out Kim in the building. I hope y'all like things that are sweet and you're not afraid of bees, because we got honey in the building. Shout out Seawalk in the building. Shout out Marco in the building. Times are hard and this market is whiplashing me. Is the market whiplashing you? Is it whiplashing you? Jada said the market is whiplashing her. Jada, does that mean the market did something today you did not expect? I ask every day, I say, hey, did the market do something that you did not expect today? Let's go deep dive into it so that we can see what did we miss that gave us a clue that the market may do what it do or do what it did. That is the question. So before we get into the price action, did the market do something today that caught you off guard? Not really. Manipulation up and down, completing market maker models. Okay, not really. Not really. They go them commercials. I just seen a commercial pop up on the tube. All right. Manipulation. Manipulation is always going to be a part of it. That's the X variable. That's the unknown variable of X, because we know if price does this, then it should do that. But there's always that unknown variable of X. What is that unknown variable of X? That whole manipulation. But when price does this and it doesn't do that, then we know that manipulation is right here. So we wait until price gets back to a point where it's doing algorithmic things. And we say, okay, the manipulation has been lifted for this dispensation of time, so I can engage. But we can never tell when they're gonna jump back in there and manipulate again. So that's why we use stop losses, so that we don't open ourselves up to more risk than we're willing to take. Remember that. Hey, man, let's go ahead and get to it, man. Let me share my screen. Let me share my screen so we can get to it. We can get to it. You bring your attention over here. Let me turn on my fancy dancy. Is Jim in here? I ain't seen Jim. Jim not in here, y'all. Can y'all believe it? Jim is not here. Jim is always here. Always here, telling me to turn on my Tim. I can't see your cursor. Tim, I can't see your cursor. Tim, I can't see your cursor. What did you do before I started using the little bouncing ball? What did you do? What'd you do? You dealt with it. Give a joker a rope. You want to be a cowboy. Now you got the little bouncing ball. Now you need the bouncing ball all the time. You feel me? All right. So we are sharing the right screen. Yes, we are. Okay, let's get to it, man. This is today's price action. This is today's open over here. We had a bearish new day opening gap. For anyone who doesn't know what a new day opening gap is, a new day opening gap is the difference between the closing price at 5 p.m. on any given day and the opening price at 6 p.m. Right? That's our new day opening gap. If there's a difference in the price, the difference between that 5 p.m. close and that 6 p.m. open, that's your new day opening gap. If that previous day happens to be a Friday and the new day happens to be a Sunday, then that's your new week opening gap. And I make those purple. So the gray rectangular shapes like this, that's my new day opening gap. The purple rectangular shapes like this, that's my new week opening gap. This right here is the new week opening gap from Monday. That's this week, this current week. And this right here is the new day opening gap for today's trading, right? Tomorrow's trading, the new day opening gap would be right over. Let's see if we got one. Okay, this is the closing price at 5, and that's the opening price at 6. So it's a very tiny new day opening gap. So the difference between that candle's close and that candle's open, that's your new day opening gap for tomorrow's trading. And that's a bullish new day opening gap. It's only a difference of this candle here closed at 20,156 and a quarter, and this candle here opened up at 20,157. So that means it's only a 3-tick new day opening gap, less than a point, right? 20,156 and a quarter, 156 and a half, 156 3/4, 157. Yeah, 3 ticks away to that open there. All right. Okay, we got, you said, oh, Tim, I don't see a gap there. You don't have to see a gap. It's just a difference in price. This closed at one price, this opened at another price. That's a gap. Okay. Okay. Now, this here is today's trading mapped out on 5-minute candles. Right. This is our trajectory. This is what we did today. This is what we did today. This is what we did today. Closed right there. Right. That's what we did today. Okay. Was today a power of 3 day? Was today a power of 3 day? Here's our open. Here's our low. Here's our high. Here's our close. Was today a power of 3 day? Let me look at the chatter rat. I have one no in the chat. Let me do it. I'm going to do this because y'all know I don't like. I have a yes in the chat. I have a no trending in the chat. I have a what in the haberdashery and hemoglobin is going on here? Jada, what is a maybe? What is a maybe, Jada? Cheese and crackers. Let me get this Zoom link and put it in the chatter rat because y'all know I don't like looking at the chat because the chat is over here on this screen over here. It don't matter. Every red candle is a open high low close. We done discussed that 900 times, Jada. Every red candle is an open low high close. Every green candle is a open high low closed. It comes from the idea of using bars, because with bars, the open is always on the right, the body is in the middle, and the close is always on. I mean, the open is always on the left, the body is always in the middle, and the close is always on the right. So if you have a open, low, high, and a close, right? Why? Because this is a up close bar. right? Meaning it's a up close candle, meaning it's a green day, right? Because the close is above the low, right? And then you have an open high, low close. This is a down closed bar, meaning it's a red candle, meaning it's a red day. Why? Because the close is down from where the open is. So every green candle has a open, low, high, close. Every red candle has a open, high, low, close. But it doesn't mean that it's a power of 3 day or a power of 3 day, because the power of 3 comes from the idea of accumulation, manipulation, and then distribution, right? So if you don't get accumulation, manipulation, and then distribution, you can have a open, low, high, closed day, but it won't be a power of 3 day. All right. All right. Got it. And when I be saying this stuff, sometimes I be saying the wrong stuff. So if y'all hear me say something wrong, be like, hey, Tim, run that back. Sound like you said that wrong, right? Because I be talking so fast, right? And I might say open, low, high, close was a red day, but it's a green day. And if I say that, I jalapize, right? That's why I try to concentrate on saying up close and down close instead of saying red and green, because you can change the colors of these candles, right? I could change the color of these candles to say, hey, I feel like I want my green days to be black, right? And then do that. And then now all of my green candles are black. All right. All of my green candles are black. I can make them really black where I change all the colors. Blackety black, y'all. I'm blackety blackety black black, y'all. I'm blackety blackety black black, y'all. Right? All is like now my green candles are black. Right? Now all my green candles are black. You can change the colors of the candles. Right? That's why I try to focus on saying up close and down close. Up close, up close days, down close days. Right? you're open, right? The high and low is always the same. And then your close on the right. Okay. Okay. Now, with that being said, today was not a power of 3 day, right? It was not a power of 3 day, right? Because we opened here, right? This is where we opened at here, right? We went up, we went up, we went up, came down, took sell side, retraced, went up, pull back, closed, right? This is not a power of 3 day, right? This is a, if you want to label this day here, if you wanted to label this day here was just a continuation, right? I saw somebody say, no, it was a trended. This was not a trending day. This was not a trending day, right? A trending day would not have this huge retracement right here in it, right? A trending day would not have this huge retracement. You see how you see it right here, this portion right there, right? This would have been the entire day here. This is a trending day, right? On a trending day, right? You go external liquidity, internal liquidity, external liquidity, internal liquidity, external liquidity, internal liquidity, external liquidity, internal liquidity. You can this is a trending day, right? You do not get this huge retracement on a trending day. All right. Gang, 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 especially the Asian assassins, especially the Asian assassins, right? So there is something, a ICT concept that you can look for at a certain time in the scheme of price delivery. More specifically, in the scheme of market maker models. There is something a very specific concept in ICT time that you look for at a very specific time of a market maker buy or market maker sell model, right? And it played out today beautifully, right? Now, my question for you is, what did this retracement right here offer you? What did this retracement offer right there? Based off the fact that there's a ICT concept. Now, gang, that's the Asian assassins. You should be chiming in right now because it should be very fresh in your mind. The rest of the gang, you know it too. But what did this retracement right here offer you? Ready, go. Ready, go. Don't be getting scared. OTE.
Offset. Oh.
What you said? Say it. Say it. Go ahead. Who was that? Who was saying that? Who was that talking? Don't be getting scared now. Who's that talking?
Oh, I was yelling at somebody, man. I thought I was muted. There's clearly a dog in the street that belongs to someone because it has a cone on his head, but he's just running around the street.
I heard a lady voice.
Oh, that wasn't me then.
I heard a lady voice. That had to be, and everybody else, that had to be Jada. Don't get scared now, Jada. Oh, you said offset redistribution? No, it's OTE. It's OTE. OTE is what was offered today. What's up, Joker? It was OTE was what? When do you look for an OTE? What, according to the teachings of Michael J. Huddleston, what is the time you want to be looking for an OTE entry? Y'all give it up for Hidden Learning Chef pulling up with the hard-hitting answer, right? Hard-hitting answer. Now that y'all know that it was an OTE, looking at our market maker buy model here, right? Right, and this is the OTE here. This is the retracement that offered the OTE, right? When would you be looking for an OTE? Now, this ain't the only OTE that's on here. This is just one that played out today. When should you be looking for an OTE? Blow me down. Completed that one there. Blow me down. We completed that one there. Another one has been completed. The last
is the macro window?
Nope, not the macro window. Marco, hold on. Let me check before I say something. Let me check. Let me look over here. Let me look at your name. Marco.
Yeah, that was Marco.
Marco, you's an Asian assassin, Marco. Come on, Marco. We just did it. Do y'all you need a clue? What's up? Who said?
That's me. I just came in. It was OTE first.
Oh my goodness. It's always your own blood. Look what mama told you. Look at all this company we got out here, boy. Just keep your mouth closed if you don't know what to say. Oh my goodness. It's OTE.
I might have the answer to your question.
OTE is optimal trade entry.
Okay. All right. Now you telling me to tell you what my OTE is off of this?
No, I
Off,
said when should, based off the teachings of Michael, when should we be looking for an OTE? When should we be based off the teachings of OTE? Because you shouldn't just look for it all the time. When should, this is the OTE retracement. This is our market maker buy model. Based off the fact that we're retracing here and we're saying that this retracement offered an OTE. Now looking at the market maker model, right?
Yeah.
When should we be looking for a chance to trade in?
You always say, I think it's that second consolidation call, what you had a smart money reversal, then you had a low risk buy, and then you be ready to get in after the low risk buy.
And what's the name of it?
OTE.
No, this consolidation, man.
So the other hold
We're
on,
going
the
up.
first it's some kind of consolidation you be saying. I don't know.
Going up, going down. What's going down?
Reclaim.
No, starts with a D.
Distribute.
Okay, and then going up is distribution going down. No, distribution is going down, and going up is what?
Delivery.
No, starts with the A.
A. I'm not sure about it. Accumulate. We got
accumulation.
But accumulation isn't going up. Accumulation is like
what I always say. Don't get confused by this for market maker models. Distribution is talking about when you're going down, and accumulation is talking about when you're going up. So you have your stages of distribution, redistribution, got your stages of accumulation, reaccumulation. Y'all know I just like to say re when we're on the right side, so I know it's on the right side of the model. I just say reaccumulation over here, and I just say redistribution over here when we're on the right side. But he have like he got distribution, redistribution, smart money reversal, accumulation, reaccumulation. You know what I'm saying? But so through all of that there, y'all give it up for Lump for pulling up with the hard-hitting answer. You want to be looking for your OTE at your accumulation and distribution levels. When you get that displacement leg off of your area of accumulation, right? Just like he said, remember what he said. He walked you through the stages of the market maker model, right? We said this here was our, come here. We said that this here was our smart money reversal, right? We said that this here was our low risk buy. And we said that we were moving into our area of accumulation here, right? When we got this displacement, right? We got this displacement off of this leg of accumulation, right? If we take our Fibonacci tool and run it from body to body, just like they say, we put it on the body there, right? And we come up here to the highest high of that leg and put it on the body there. And then we turn on our OG OTE, right? We got a 62% there. We got a 70.5 there. And we even came down and picked up the 79 off of that OG OTE retracement, baby. And then we pick up to the buy side delivery to complete the market maker buy model. That's it. So that's one target we had that got hit in the market maker buy model. That's another target that we had that got hit in the market maker buy model. That's another target that we had that got hit in the market maker buy model. And that's another target that we got hit. And we've completed this smaller market maker buy model there. And if we zoom out a little bit more, right? If we zoom out a little bit more, might have to be a lot bit more, that we are in the midst of a very large market maker buy model here over an expansive length of time. And that right there would be that overall target that we were shooting for on the higher time frame, and it would complete a very, very large market maker buy model that started way back on March the 25th, right here. Very, very, very large market maker buy model. So again, give it up for Lumpford for pulling up with the hard hitting answer. You should be looking for the OTE at your stages of accumulation or distribution. That's when you're looking for, that's the optimal time to look for the optimal trade entry to play out based off the teachings of Michael J. Huddleston, right? You just don't want to look for stuff everywhere. These doggone commercials.
So are we looking for it when it starts coming down again? That's when we throw up the fibs.
You thought when we hit an anticipatory reactionary point and we're anticipating this retracement, that's when you can run your fibs the entire time. But you don't want to run your fibs the entire time because you're going to be looking for it the entire time, right? But when the algorithm gives you a signature, right? When it gives you a signature, then you can run your fibs, because this right here, right? This area, for example, this area of accumulation, we took off and we never came back down. We treated this as a balanced price range and we kept going up, right? So if we look at this area of accumulation, when we took off there, now we can take our Fibonacci's, right? We can take our Fibonacci's here and run it up. I need to get to the place where we left, right? Take our Fibonacci on the expansion leg. I went to the low of the thing. Right, we take our Fibonacci's and go to the expansion leg here, right? This is where we took off and we left. Go body to body. This is the lowest body there, the highest body, right? Body to body, and then we run our OTE there, right? Off that area of accumulation. In this case, we only came down to 70.5. We didn't get the 80, but it's coming off of this area of accumulation. Right now, this area here of accumulation, we never came back down to the discount, right? We had a breakaway gap and we only came back to this imbalance here. So we never came back down to this discount. So for this area here, right? For this area of accumulation here, right? We never came, because this is our whole little area there, right? Remember what we said? We was looking at let me go to 5-minute candles here, right? Remember over here where we was looking at this entire thing here as our area of accumulation, right? That was our whole area of accumulation. And we said that inside this accumulation, we got offset distribution, right? So we're looking at the expansion leg there, right? We go from this is our expansion, go from our lowest body to our highest body, right? Because here we never came back down to the discount. Pushed up, since we never came back down to the discount, what are we doing, right? We're just extending the range out, right? This was our range. We never came back down to the discount. We went up, made another high there, right? We never came back down to the discount. We went up, we made another high there, right? We never came back down to the discount. We went up, we made another high, right? We kept going up, making these highs. Now, when we finally came back down to the discount, what do? We came to OTE. This OTE here is based off of this area of accumulation. This OTE here is based off of this area of accumulation, right? So you're looking for the OTE once you go into your area of accumulation or distribution, and then get that expansion leg. And everybody that's not an Asian assassin, you just got that for free. Now, you understand? That's good. You good, Marco? You understand that?
Yes, sir. Thank you.
All right. All right. Now, what else? What else I want to talk about? I don't know. Okay, so Let's look at price. So today we addressed that it wasn't a trend day. This was just a continuation. This was a continuation from what we have been doing. You know what I'm saying? Just a nice continuation to the upside, right? Right. We expanded, we came here, we expanded up, we retraced, you know what I'm saying? So in the today's price delivery, what IPTA delivery method was today? Right? We started here. What IPTA delivery method was today? Not price engine models, but what IPTA delivers in two different ways. It's one of two ways that IPTA is going to deliver price. Which delivery method was today? Hmm? 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 Hmm?
Or was it CERT?
Give me the letters, because I can't remember which one is which.
C E R and CER retrace, continue expansion, retrace, and then we end up, what is the last letter? We retrace, and then we,
Last letter D.
thank you. Appreciate you.
Shout out Yolanda and the phone a friend help from Lump for
Come through.
getting it. We got it's either the curd or the surd. I don't know. But this one here, this the curd. We got consolidation, expansion, retrace, and deliver. Now, IPTA we got consolidation, expansion, retrace, and then we deliver up here. Pull back really nice off that delivery too. Nice pullback off that delivery, right? So IPTA is going to deliver price. It's only two ways it's going to deliver price. You're going to consolidate, expand, retrace, and deliver, right? Or you're going to consolidate, expand, reverse, retrace, and deliver.
You gotta say your life, right?
What you talking about, Lump?
Oh, my bad. I thought you was on mute, man. I'm talking to my homeboy. I had a picture.
Oh, he trying to, that's why he talking a lot tonight, y'all. He trying to show up to his homeboy that he know this.
I just picked him up. He just got in the car. Yeah, this is my brother.
He trying to show off that he know the stuff. You know what I'm saying? He got it.
Nah.
Right.
Anytime you need to run class, now let me know. Now, anytime you need to take off and let me run class, now I got you. Now.
Oh my goodness. Well, look at here. Hey, but yeah, so you either going, like we were saying, like today we consolidate, expand, retrace, and deliver, or you can consolidate, expand, reverse, retrace, and deliver. Right? Them the only two ways price is going to be delivered. Why is that? Because price can only move in three directions. It can move side to side, which is consolidation, right? It can move up, which is a type of expansion. It can move down, which is a type of expansion, right? What's the difference? When we on the difference between retrace and reversal, right? When you retrace, right, you just don't go all the way back to external liquidity, right? Here we expand, right, to this point. We expand down to that point. Since we did not break that point there, this expansion down is just a retracement, right? And then we expand up, right? And then if you look here, we consolidate there, right? And we expand down. But when we expand back up right here, that's a reversal, right? We expand it down and expand it up again, but we went all the way past that external liquidity. So that's a reversal. You went one way and then you change directions, right? So price can only consolidate, go up, or go down, right? So when you come to delivering price, you're going to consolidate, expand, retrace, and then deliver, or You're going to consolidate, expand, reverse, retrace, and then deliver. Only 2 ways that price will ever be delivered. Okay? Okay. This is a beautiful refresher night. Why are we doing this refresher night, Tim? Because what do I always say? What is my favorite thing to tell y'all to remember? Somebody please tell me, what is my favorite thing when I be doing this? What's my favorite thing to tell y'all to remember? Somebody let me know, please. Let me know, please. What do I tell y'all to remember?
Blocks on blocks.
You got to say the whole thing. Say it for me. Now, come on. I know you're working, but say it for me. Come on, say the whole thing.
And stacks on stacks.
You got to say it right. Don't be messing up a quote.
Blocks on blocks and stacks on stacks.
Say it with me. Stacks.
Stacks.
On stacks.
On stacks.
On stacks.
On stacks.
On stacks.
On stacks.
Blocks.
Blocks.
On blocks.
On blocks. On blocks.
On blocks. There you go. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. You got to remember that. What does that mean? Always, everything you learned from the beginning up until now, just keep remembering it because it don't go nowhere. You need all those little nuances when you get over here, right? When you're looking back over here at what price did, you got to remember all that stuff when you get over here so you can be like, oh, that's what we did. And if y'all notice, right, I have not talked about one PD array yet. I have not talked about one PD array yet. Why is that? Because the most important thing to know when trading ICT concepts or any other concept is price delivery and order flow, right? If you know that you're in bullish order flow, what are you going to be looking to do? If you know that you're in bullish order flow, what are you going to be looking to do and where? What are you going to be looking to do and where? Somebody tell me that.
You're gonna be waiting for price to give you a retrace back into discount for an opportunity to buy.
Buying a discount. If you're in bullish order flow, you're looking to buy at a discount. If you're in bearish order flow, what are you looking to do and where?
Sell and premium.
Sell and a premium, right? That's the most important thing to remember, right? Sell and a premium. Shout out Yolanda for pulling up with the hard-hitting answer without the phone a friend option utilized, right? That's the most important thing to remember. If you're in bullish order flow, I'm looking for a reason to buy in a discount. If I'm in bearish order flow, I'm looking for a reason to sell in the premium, right? As you see what I talked about today, OTE. OTE has nothing to do with any PD array. It's all about order flow and price delivery, right? Order flow and price delivery. We know that we are in bullish order flow because we're on the right side of a market maker buy model, and we have just got a displacement off of a stage of accumulation, right? We had a stage of accumulation over here, right? We got the different areas. We looked at an OT over here somewhere. We looked at an OTE based off of this one. I've hit a stage of accumulation and I got a displacement leg. I can be looking for opportunity to trade OTE, right? If I'm on the right side, I can be looking for an opportunity to trade OTE, right? Regardless of if I have a order block or a fair value gap or a breaker block or a mitigation block or anything, right? Anything, right? So now, when it comes to the PD arrays, those are your individual qualifier of when I'm going to push the button, because that tells you what your eye can see the best. What can my eye see the best? Does my eye see breakers? Does my eye see fair value gaps? Does my eye see liquidity voids? Does my eye see balanced price ranges? What does my eye see the best? What does my eye gravitate toward? Right. And then now you know what to be looking for when you say, okay, I see my PD rate. Now that I see my PD rate, right? I see my PD rate in the discount and we're in bullish order flow. I'm looking to be buying off of that PD rate. I'll see my PD rate in the premium and during bearish order flow. I'm looking to be selling off of that PD rate, right? But when we get caught up in what's the best model, what's the best this, what's the best that, we can't see the forest from looking at the trees because we forget stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks, right? You got to remember them pillars, baby. The open, high, the low, and the close. Those are the pillars. Those are the pillars from the beginning, right? The open, that's the first agreed upon price. That's your first area of some type of fair value. That's the first agreed upon price, right? The high, that's the most somebody was willing to pay for something, right? The low, that's the least somebody was willing to take for it. The close, and that's the last agreed upon price. That's the last point of fair value that somebody said, okay, this is worth this. You have 4 very distinct prices that's letting you know about what the algorithm is trying to do, right? That low and that high, that just gave you a range. You got a dealing range. You got a dealing range from that low to the high. On some time frame, that low and that high created a dealing range. Does that low and high create a dealing range on every time frame? No, it doesn't. But on some time frame, that low and that high created a dealing range. That's why you see on my chart every single day, I have the previous day low and the previous day high marked out on my chart. Why? Because on some time frame, that is a complete dealing range. Blow me away. This boy's cooking. Let him cook. 50% between that high and that low, that's equilibrium, right? Price tends to consolidate at equilibrium. Why? Because that's a fair value. So if you're hanging in the middle of your daily range, you're just getting ready to get chopped up if you're trying to push a button, buddy, because you're at a place where price will consolidate. Wait until it tips its hand, right? And then when you notice that it's consolidating, look, golly gee, Willigers, look at this. Did anybody just notice this right here? Look at this here. We're consolidating right here, right? We're consolidating right there, right? And if we look at yesterday's range, that's very near equilibrium, right? It's not exact, but it's close enough for government work. Just eyeballing it. Let's get a Fibonacci tool and see exactly where it is. Right, we're going to plop that Fibonacci tool there, right? And we're going to put that there on CE, right? This is the exact middle right there, right? This is the exact middle right here for yesterday's range, okay? So we're pretty much in the middle of yesterday's range when we open up, right? Because we opened here. We open up roughly right at the middle of yesterday's range. And what do we do out the gate? We just consolidate right there. We gap open very close to the middle of yesterday's range, and we just consolidate, right? Last night during the Asian session, somebody probably was getting chopped up back and forth inside this consolidation, right? And then we took off. We got expansion, right? And once we got that expansion, we retraced back down, right? OTE, right? For all of the range. And then we pushed on up, right? Then we pushed on up, okay? Now, if you ever want to see, right? If you ever want to see what's the range that the algorithm is working inside, you can use a Fibonacci tool, right? What's a Fibonacci tool? That's when you take your Fibonacci. In this case, we're just going to place it on the low here. And then you stretch it up until 50% gets right around where you're consolidating, right? And then you just take it to the left, until you find a high. And just drop it on the high right there, right? Boom. Prices consolidate in there, right? This is the range that consolidation was in reference to, right? This dealing range here, that high, that low, right? When you was consolidating there, right? That's your dealing range right there. Right? And as you see, when we expanded up, we completed a market maker buy model once we traded above that high right there. All right. Wow. This guy is cooking tonight. Hey, all I got to say is this stuff really works, man. This stuff really works. Now that I done cooked, why ICT started his channel on OTE? Great perspective. I don't know why he started his channel on OTE. OTE was like one of the first things that he introduced. He introduced OTE. He started introducing like order blocks a little bit, but OTE was like one of the first things he introduced. And when he first introduced OTE, he didn't give it like super in depth, just like everything. Like in 2024, he started pulling back the curtain for real. 2025, you know what I'm saying? He been dropping serious gems about how to use the content, right? I think they are saying OTE is the reason he didn't start it because of OTE. He started because he said he started his channel because he said he wanted to see if he can create another him, right? And he used to go into like forums back in the day and with like America Online and stuff. He used to go into chat rooms with American Online and then go into forums like Baby Pips and stuff back in the day. And he would just drop gems about his concepts to see if anybody would be able to pick up on what he was putting down, right? And nobody ever did. Nobody could ever pick up what he was putting down, right? And even when he started doing the mentorships, right, people still weren't able to just pick up what he was putting down, right? And then once he did the mentorships and he started putting everything out for free because people started selling his mentorships, then a lot of people still aren't grasping it because they're, you know, it's hard to get out of the retail mindset. It's hard to get out of the pattern trading mindset. It's very hard to that's why if you look at his core content, he starts with price delivery and order flow. That's it. That's what he starts. He don't start talking about PD arrays until month 4. So imagine going through his mentorship, right? You're getting, you know what I'm saying, 8, 9, 10 videos over the entire month, right? You getting 1 to 2 videos per week, and you don't get into learning. You don't get into, let's look at it. Let's look at it together, right? I've looked at this before, but I just like looking at this because people always ask me, Tim, I can't see breakers. Tim, I can't see order blocks. Tim, I can't see this. Tim, I can't. What Mark talking about? 100 days, Black Man's Review, support or regret. Brutally honest Black Man's review of Trump's first 100 days. What is Mark talking about? I'm gonna have to go look at that and see what he talking about. What in the long dreads is going on here? Cheese and rice. Golly, welcome to Wick City. I'm sorry, y'all. I got distracted. ICT play a list. Okay, so core content month 1, right? Core content month 1. The first thing you talk about is elements of a trade setup. You go in thinking, oh, he's going to teach me the elements of trade setup. Guess what he talks about in this video right here? He's talking about like what I talked about as far as the I can't skip it. What I talked about as far as the I got it muted, y'all. Don't worry about it. right? See, right here. Remember when I was telling y'all about this right here? The expansion retracement. This is what he talked about right here, right? This is what he talked about, right? Expansion, retracement, reverse consolidation, and which PD arrays is tied to, right? You don't know what these things are. It's like he's talking about it's tied to this, but you don't know what these are. He hasn't introduced them. He hasn't shown you what it looked like. He's just talking about this part of it right here, the framework, the context, right? He's talking about the price delivery, the right here. See, this is expansion. This is all he talk about. The delivery, price delivery. That's it right here, right? Consolidation, expansion, retracement, delivery, consolidation, expansion, reversal, retracement, delivery, right? This is how I share it with the gang, right? This is the first thing he's talking about, telling you what's tied to what, right? What's tied to what? This is the first thing he's talking about, telling you how to read the order flow, right? So that's the first thing you do. You go through all this stuff here, right? Talk about what's equilibrium and discount, equilibrium versus premium, fair valuation, liquidity runs, impulse price swings, all this right here, market protraction, right? All that. That's month one, right? How many? God dog it, right? That was, how many videos was that? 8 videos, right? So that's roughly 2 videos a week for month one, right? Then month two, right? You go through month two, right? You got 8 videos in month two, right? Talking about growing a small account, risk management, all kind of stuff like that. Month two, okay? Then you go in here, month three, right? You go into month three. You got 8 videos in month three, right? Month three, you talk about time frame selection, right? Institutional order flow, institutional sponsorship, working on your anticipatory skills, market structure, macroeconomics, stuff like that. You know what I'm saying? All kind of stuff. Market maker, trap, head and shoulders patterns, right? Then, well over here, you're 3 months in now. You're only getting 1 to 2 videos a week. You can't skip ahead. You know what I'm saying? You're getting 1 to 2 videos a week, and whatever he talk about with the stuff that he's putting out, he ain't giving you no extra juice, right? Then you get over here, you got month 4 here. And in month 4, you got 14 videos, and then the 1, 2, 3rd video that you get in month 4, I don't know if this is in week 1 or week 2 of the month, you get introduced to the very first PD array, the order block. Right there, you get introduced to the order block in month 4, video 3. That's when you get introduced to your first PD array. 4 months down the road, right? 4 months down the road. Okay, so you got a whole lot of stuff you need to understand before you even start thinking about PD arrays. Okay, nail down price delivery and order flow, and you will be ready to dive into the PD arrays. Okay, let's go. We see what we did here for the Asian. We consolidated, right? We got us a little consolidation going on there. And then over here, around 855, we got very nice displacement up, right? Once we got that displacement up there, right? Traded above this area there. Then you see here, price treated this all as a balanced price range, because on the retracement back here, right, we only came down to this buy side imbalance, sell side inefficiency. Yes, we do have a buy side imbalance, sell side inefficiency here, but at this point in time, price is treating all of this, everything below here, right? Everything below this orange line here, this old monthly high, right? Once we left above that high right there, it's treating this as a balanced price range right now. So we retrace back to a discount of this expansion leg right there. If you get your Fibonacci tool, go from the low to the high. When we left this area, we came back down into a discount, right? Inside the fair value gap. And then we took off to the upside. All right. Right. Price pulled back to a discount. You say, Tim, it's up here in a tippy top premium and it's going up. I thought you said buy in a discount. Balanced price range. Algorithm done with that for this time. This is your range that you're looking at here. Traded back to a discount and went up. Okay. So we got up here. We got our midnight open right here. This is our midnight open. We traded up into the new week opening gap from Monday. As you see right there, we're hovering around consequent encroachment of that, sticking around the lower half of the new week opening gap. Hung there, we dropped down right here at 1:30 a.m., dropped down all the way up to 2:35 a.m. below the midnight price, below the short-term sell side, back to the prior day's high, right? And then we displaced up, right? And then once we displaced up here, as you see, price displaced away, pulled back down into the discount, traded down to the order block, bodies of the candles, stopping right there at the imbalance, right? Overshot it just a little bit because we stretched down to the order block, and then boop, we delivered price all the way up, falling short of the weekly high, right? So here at around 5:45, we made the London high, right? And then we start to break down again. Nice little reversal pattern, right? Break it down, break it down, break it down, right? So we drop down, right? Manipulate out buy side, expand down, retrace back up into an order block, boom, expand down right here. And that right there is at 8:35. So this is right around the news here. This candle here starts the news. So we go up, take out buy side on the news candle, boop, buy side, then immediately come down, take out sell side. That is known as a Judas swing. In this case here, it is a bearish Judas swing. Use the news to push above the consolidation, taking out the buy side, then immediately reverse, taking out the sell side, trade back up into a premium close to the high of the new week opening gap, right? First candle come up, stop at consequent encroachment of the new week opening gap inside the SIBI, right? Next candle here at 8:50, starting the macro, trade up, go above that high, come close to the high of the new week opening gap, and then we start to break down, right? Ending off the macro right around here, right around midnight. Okay. Yes, right there. Close the macro right there at midnight. Okay. Trade back up, touch the new week opening gap again. We're in a nice sell program here. How do you know we're in a sell program? Because price is pushing through discount, PD raise, respect, and premium. Pushing through sell side, rejecting off buy side, right? Moving from external liquidity to internal. External, that right there was a manipulation, but it's internal to the overall move. Manipulated out internal liquidity, right? Internal, right? External to internal, external to internal, right? External to internal, external to internal, external to internal, external to internal, external to, wait a minute, external. That's a reversal, right? Trade back down, hit the fair value gap, right? Hit the fair value gap there. Where's that fair value gap? Outside of this balanced price range. Come from here to there, right? Come back to a discount right there in that fair value gap. Institutional order flow entry drill. Respecting the inversion fair value gap. Take off, take out the buy side. Right? Come up here, choppity chop, chop, choppity slop, choppity chop, chop, choppity slop. Dump for the end of the day. Choppity chop, chop, choppity slop. Right? And that bar is your intraday price action recap. I didn't go into a whole bunch of detail about the intraday price action because we was cooking some other stuff, but I feel like today was a good one. Did y'all get anything out of this today? And does anyone have anything for me? Does anyone have anything for me? Hopefully you got something out of it. Did y'all get anything out of this today? Let me know. Let me know. If you got anything out of this today.
Oh, excellent. It was very, very good. You were in your bag.
She said I was in my bag.
Sir Timothy was in his bag. And it's good to keep hearing it over and over again because, like, sometimes even in the practice trades, I can hear your voice saying something, and it just helps with the concepts repeated over and over.
Snow. What does that say? Snow. I don't know what that say, but I don't look at individual tickers. I don't look at individual tickers, so I don't have any thoughts on United Health because I only trade the index futures, but I don't look at individual tickers. Right. If I was to look at an individual ticker, the only thing I could do is just look at what are goings on with what it looked like. Right. I'll put it on let's go to a weekly chart. Right. I'll put it on a weekly chart. Jeez Louise, that had a massive pullback. All right. So looking at this right here, right, what we come back to, first thing my eye draws to is price is here.
You're not sharing, Tim.
Oh, thank you. Thank you. Because I was about to start talking and y'all know I was not going to go back and do this right here. All right. So, wait a minute. Let me do this right here for Snow. That's got to be another language because I do not know. It says SNO. It looked like an upside down M and an upside down Y. So I'm saying snow because the upside down M look like a W. Then it look like an upside down. Let me see. It look like it say, and then like an upside down Y, a backwards U, a O, a backwards U, a backwards. I don't know what that is. Right. Oh, it says it's anonymous upside down. Oh, okay. It's anonymous upside down. Okay. All right. I got it. Okay. Anonymous upside down with Jigsaw as your thing. I don't know if I want to answer your question no more. You got Jigsaw as the picture and it say anonymous upside down. Who are you? Who are you? Anonymous upside down. Who are I before I got on here, I was looking at Hard Eyes and I fell asleep watching Hard Eyes. And Hard Eyes got this deranged lunatic going around killing people on Valentine's Day. So who are you, anonymous upside down? No. Don't retract your statement upside down. Come on back, say it with your chest. Let me do this for anonymous, right? Let me do this for anonymous right here. Okay, I'm gonna do this right here for anonymous too. Right, this is what we're gonna do for anonymous right here. Anonymous, right? I am not a financial advisor. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. Throwback gang. Y'all remember when I used to say that, right? I say that on every video. My mama used to be like, boy, make sure you do that disclaimer. So looking at United Health, right? This the one when they was praising that little high yellow boy that went out there and gunned that man down. And they was praising him. They gunned that man down from this company right here. Hey, look here. I'm fun to get on my soapbox for a minute. That little high yellow boy, he looked like he might have been Italiano or something like that right there. When he gunned that man down, y'all was praising him. I want y'all to keep that same energy when that dude, you know what I'm saying? That dude ran over that police that shot his son. Keep that same energy. Keep that same. Y'all like, oh, they turned off his mama health care and he was protecting his mama and he gunned that man down on his way to work.
I want y'all to keep that same energy. When that dude that he shot that little boy, yeah, he might have been still in the car, but he was running away. Fell down by the garbage can. He got a gun. Cat. Shot the little boy up. I want y'all to keep that same energy for his daddy now. Because his daddy said, okay, you got my son. I got you. Keep that same energy. The same thing y'all said about that yellow boy. That yellow boy with that toolie. Let's keep the same energy for the brother in the dually. You feel me? Now, I just lost about 12 subscribers just did. Wipe out. Hey, looking at United Healthcare. Am I sharing my screen? Yes, I am. First thing I see, hey, upside down. You still in here? Okay. All right. There you go. I'm glad you found me too. So look, price right here, right? That's where price is. Okay. We've did this huge pullback. So since we did this huge pullback coming off this huge consolidation, right? I want to say, hey, where are we in the scheme of price delivery? Right? Right. What did we say? We said price will deliver in two ways. There's two ways price will deliver, right? He cooking tonight. He cooking tonight. That was OTE. Didn't mean to open that. That was OTE. Didn't mean to open that. IPTA. Is it an IPTA? Yes, it is. All right. So there's two ways price will deliver. Okay. So price will consolidate, it will expand, it will retrace, and then it'll deliver. Or price will consolidate, it will expand, it will reverse, it will retrace, then it'll deliver. Okay. That's how it moves, right? And then in the sense of order flow, you have buy programs and sell programs. Right there, right? We got buy programs and sell programs. And nope, that's not that one. All right, order flow. Where is it? Is it in? I just did this. I can't find it. I can't find it. I guess that is it. But I thought I had one where I broke it down like real simple. I thought I had one where I broke it down real simple. But this one here you see is you got buy programs and you got sell programs. I can't find the one where I broke it down real simple, but buy programs for layman terms is you're in a bullish trend. Sell programs for layman terms, you're in a bearish trend. Okay. So here we were consolidating here, and then we expanded to the downside. So price is there. So I want to find out, where are we in the sense of price delivery, right? Where are we in the sense of price delivery? So if price is here, right? So then I'm saying, okay, I want to see the lowest low that I can see that makes sense for this retracement here. And as I look back to the left, I see this low here, right? That's the lowest low off of this expansion up right there, right? When you say, well, Tim, it goes way back there, but no, look, this low here came and took out liquidity, right? So that established a new liquidity pool, right? That established a new liquidity pool for sell side of a new dealing range, right? Why is this not scrolling? What's happening with my, oh, I was holding that down, right? That established a new liquidity pool there. Okay. Boom. On the bottom side, right? And then now that that has established a new liquidity pool, right? Price went up, 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 up. This is the highest high right there, right? That's the highest high there. Boom. Okay. So that there is the top, tippy top. Boom. Right. So this right here is my dealing range, right? That's my dealing range. That's the lowest low that took out liquidity. That's the highest high that took out liquidity. We are right here, right? So I'm going to get my Fibonacci tool, run it from my lowest low and run it to my highest high. And I see that I'm right here, just in a slight discount. Hold up. Somebody stop the presses. When I look at this expansion up, what happened right here? What do they call that? They call that consolidation, baby. And where is that consolidation? It's right there at 50%. This stuff does work, right? So right here, right? That's equilibrium of the overall dealing range, right? So now, if I'm bullish on UNH, I want to be looking for a reason to buy in a discount, right? I want to be looking for reasons to buy in it. I'm going to sit this mic over here because I'm tired of holding it, right? I want to be looking for a reason to buy in a discount, right? Looking at this now, we have just come into a discount, right? That does not mean I'm just going to run and buy, right? When it comes to a discount, I want it to do certain things, okay? So now, one of the things I want to see it do, right? If I'm bullish, I want to see it take out liquidity to the upside. Boom. We did that right there. Here we are. We're consolidating, right? We came up, boom, took out liquidity to the upside, right? Then I want to see it come down and trap short breakout traders in. Boom, right? We're forcing breakout traders in. Somebody's getting short below these lows. Boom. We're forcing them in. Okay. Now that they're forced in, right? What do we have over here? We have some internal sell side liquidity, right? We got some internal sell side liquidity. We're going to mark it with some dashes, right? That's internal sell side liquidity. Okay. So with that internal sell side, I hope them commercials ain't popping up on y'all like they popping up on me. I really hope they not. But we got internal sell side liquidity. Okay, so this is weekly charts, by the way. All right, so we go up and we come back to a discount, right? This right here is a nice liquidity to sweep right there. That's a very nice liquidity to sweep here. Okay, now you have several options you can do, right? Well, you got several options that I will be looking at, right? There are levels I will be looking for to, let's just say, if I was going to try to scale into positions, right? If I'm trying to scale into positions, I'm not trying to pick a bottom, but I want to scale into a position. because I just, you know, I want to dip my toe in. I want to start dipping my toe. Okay. There are several approaches that little Timmy Rogers, you know, used to take when he was trading options for swing trading, right? So looking at this run here, right? We have this run here, right? So what has price done? All of this right here is very efficiently delivered, right? This is very efficiently delivered. Okay, so we're gonna put a line here, right? Very efficiently delivered there. Okay, so when we leave this area, right, we come back to a discount there, right? But when we leave this area, right, we don't come back to a discount there. So for this here, right, I would be looking at, I would come from here, boop, right, and I would go all the way to there, right? Now put it body to body, okay? I will put it body to body here, and then I will look at a OTE. Uh-oh. I will look at an OTE, right, of that range right there, right? And so with OTE for that range right there, right, I can see that the algorithm, right, is all the way down here. This low right here, the way I said that's a nice liquidity sweep, that low right there would give me a 79% OTE based off of this area where price never came back to the discount, right? That right there, that's this right here. This is the first, after leaving this efficiently delivered area, we went up, came back to a discount, went up, never came back to the full discount, right? And now we're getting this deep retracement. So at this low here, right, I will be looking to get a little piece of like some far out calls, right? I'll be looking to get a little piece of some far out calls, right? Right there. That low there, get a little piece there, right? Just put a little taste on, okay? And then if price wanted to continue to come down, then I would look at, right, the OTE for the entire range, right? And you see the OTE for the entire range, this 79 is very close to the 62 of the entire range, right? So if you say, okay, I don't want to get the 79 of this range, I want to wait and get my little piece at the 62 of the overall range. That's a level you could be watching. 359, right? 359.68, just say 360, right? $360 or $359, however you want to do it. And then $385 or $386 because it's 385.66. You can say, oh, I'm gonna get me a piece at that. I'm gonna get me a piece at that, right? That's for your OTE retracements for getting, you know what I'm saying, long farther out calls, right? So you get you a little piece at 62, right? And then you say, okay, if we come down to a 79, right, I'm gonna get me another little piece, right? So I'm gonna get me a little piece at 62, and then if it come down and give me a 79, I'm gonna get another little piece at 79, right? For some what's names, and that's based off the entire range, right? And like I said, you want to check the piece where for this is the area where we never came back to the discount. So you look for price to, you know, want to revisit that, especially on this deep pullback, right? You're coming back to this area here, right? So you can get you a 79. Get out of the way, right? Hit the wrong thing. Right there. Right, that'll give you, right there. 79 is 32.62. So I mean 382.62. So 383 is your 79. That low right there is 385.55. So you're looking at 386, or 383, right? The low is around 386. The 79% OTE is at 383. You know what I'm saying? I get a little piece there if it was me. Or like I say, or you can wait for 360, right? That'll give you a 62% retracement if you want to get a little piece at 360 instead of the 386, right? And then if you get the 360, right, then I wouldn't get another piece unless it gave me 290, right? If I got a piece at 360 for, you know what I'm saying, long term, just say like a year out, buying calls for a year out, and if I wouldn't get another piece unless it gave me 290, right? Based off that right there. And that's just looking at that. Or if I was buying shares, right? If I was buying shares, I'll same thing, get a little piece at 360 or 380 or 360, and then I wouldn't get another piece unless it gave me 290, right? That's my thoughts on UNH. All right, hopefully y'all found some value in this. We even got an opportunity to look at an individual stock. How often do we do that? Hey man, what's up, Sonia? What's going on? What's up, Vernon? What's up? Who is Joe T? Did I ask that before? I think I asked that before.
No, you asked who is Joe Toomer, because last time it showed up as Joe Toomer, but technically you're right, Tim.
Oh, okay. Okay. What's going on, man? What's everybody? Slater up in here. What's up, cuz? Got Slater in here for once.
What's up, Tim?
What's going on, Vernon? Hey, do anybody got anything for me, man? That's it. That's all I got for y'all. I'm about to go watch Hard Eyes. Hopefully y'all got something out of this today, man. I think this was a good one today. If you ain't getting nothing out of it, hey, I promise you I'll try my best the next time. Today is Thursday, right? Today is Thursday. Gang, gang. If you in the gang, put a 1 in the chat. No. Tim, do you still trade leaps? I remember you talked. No, I ain't trade. I don't trade options. I primarily trade futures. Every blue moon. Okay, let me say this. Gang, that's not diamond members. Put a 1 in the chat. I haven't traded options in forever because I feel like the market conditions for my personal trading, it's not conducive for trading options on a long-term basis because we've been dealing with too much divergence and prices, like it goes up and down. We be Christmas tree trading, right? And I like to trade options for longer term if it's going to be sustained moves. You know what I'm saying? If it's going to be sustained moves. Every now and then, like I say over the last year and a half, I think I made like 2 options trades. And it was only, I bought it for like a week out and I closed it like either the next day or held it for 2 days. Like but I don't trade options no more. Gang. If you non-gang, I mean, if you're gang and you're not a diamond member, right? Do me a favor, go to the Discord right now and DM me, Tim, I'm here. Right? DM me, Tim, I'm here. And for everybody that DMs me, Tim, I'm here, I see Sarah, I see Kim, I see Valentine. Go DM me right now, Tim, I'm here, and I'm going to send you the link later. Matter of fact, I'm going to set it up right now. You are invited. Y'all know what it is. It's tomorrow, Friday, and y'all gonna join us for the tape reading. Y'all gonna join us for the tape reading on Don't Force It Friday. So if you are in the gang right now, if you are in the gang and you're not a diamond member, DM me, Tim, I'm here, and I'm going to send you the link for the tape reading session tomorrow. I'm setting it up right now. Tape reading session. I don't know. Y'all probably can't see it because Zoom don't be showing it. Oh, I ain't even sharing my screen anyway. Am I sharing my screen? Yeah, I ain't sharing my screen anyway. All right. So tomorrow is the 9th. We start at 9 a.m. We go from 9 until like 10:15. That's usually how long we stay on. Sometimes we stay on longer, right? But I try to go from 9 to 10:15. Okay. All right. Now, when I get off, there's the invites are there's no more invites. So make sure you hit me up now. All right. So going to the Discord, I see Valentine. Boom. Valentine, you have the link. I see Sarah. Boom. Sarah, you have the link. I see Kim. Kim. Boom. You have the link. I see KC. KC. Boom. You have the link. All right. That's all I see. Anybody else? Anybody else? Does anybody else want to come to the tape reading session tomorrow morning? If you're in the gang and you're not a diamond member, going once, going twice. He times a matey. Sonya, you don't want to come? You ain't no diamond member, Sonya.
Tim, I'm having issues with my phone. I want to come now.
You're having issues with your phone.
I'm on the road.
Why you could have unmuted it with like, Tim, I'm having issues. You supposed to immediately unmute and say, Tim, I'm having issues.
Okay, well, I'm here now.
Let me hold on, let me find your name and I'll send it to you.
Thank you.
Glad I looked over there and saw you.
I appreciate you.
Let me see. Sonya. Sonya. Okay, there you go right there. God dog it. What is it saying? Hold on. Members. I know how to find you. Sonya. There you go. Right there. All right, Sonya. Now, message. Clickety click.
Thank you, Tim.
All right. Boom. Sonya, you got the link. There you go. I sent it to you. What's the name? I sent it to you over there. Okay, so now let me see. Anybody else who I see? Anybody else that's not a diamond member and want to come? Nobody? All right. Okay. I appreciate y'all for hanging out with me, man. If you like this, man, please hit the like button. I think that tells the algorithm that y'all like it. If you got something out of it, hey, share it with somebody else. Maybe they'll get something out of it too, right? We trying to build a new Wakanda together. I can't, hey, if y'all don't want to build it with me, that's fine. I build my own little piece and just, me and my family be over there by ourselves. But I'm trying to take as many of us as I can with me. All right. So until the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action, man. Remember, it's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you know Hablo Espanol. Y'all be safe out here in these trading streets, man. Gone.